All right, guys, back to work tonight. Time to get back in the action. Tuesday evening, it's March the 23rd, 2021. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, if you're tuning in for the first time tonight, it is so great to have you with me because my job tonight is to help us find the best trades for tomorrow. That's Wednesday's trading session. I got a jam-packed video in store for you guys tonight. Charts are all prepped up in the background, as you can see. Got a lot to cover here on this video. Got the E-mini, got the Nasdaq, and got the gold on our radar for tomorrow. Boy, speaking of tomorrow, here's the big question. Who wins the battle for Wednesday? Is it the range-bound traders or the trend-following traders? Because you're going to see here in a moment on the charts behind me here tonight, lots of ranges, but we got a bunch of real strong moves, right? Strong moves up, strong moves down, lots of momentum to work with tomorrow, but we got those ranges that are acting like price magnets. So who wins the war on Wednesday, right? Is it a range-bound market or a trending market? We're going to break this down and we'll talk about how to capitalize on both the ranges and the trends and my favorite trade setups I'm tracking for Wednesday's trading session. Before we jump in though and get our hands dirty on these charts tonight, I just want to make sure to remind you to subscribe to our YouTube channel because I publish this video newsletter every evening with our best trade ideas for the following day. I don't want you to miss our next video newsletter, so make sure you subscribe to our YouTube channel, and when you do, hit that little bell icon so you always get notified every time I publish something new. And don't forget, if you have any questions for me, drop those questions in the comments section. I'll get them answered as soon as possible. And I really appreciate you guys tuning in every evening and watching this video. If you enjoy the video as much as I enjoy making it for you, if you like the video tonight, do me a big favor, hit that thumbs up button, hit that like button, and I always appreciate you guys supporting our YouTube channel. So again, make sure you subscribe, drop those questions below in the comments section, and thumbs up if you guys enjoy the video here tonight on this YouTube channel. But enough of the introduction. Time is ticking. Let's get into those charts. So like I mentioned earlier, here's the question. Who wins the war for Wednesday tomorrow? We got some ranges. We got some trends. Who will take control of this market? Boy, everything here really revolving around range-bound markets. I've got range. Now, you know what I'm going to say, right? Ranges act like magnets. Whenever I see a trading range, I always want to buy low, sell high, focus on failures. But look, though, there's a lot of momentum. Strong move down, strong move down, strong move down. So can these sellers, can they hold, right? Can they hold these pullbacks? Or do we end up, right back up where we came from earlier on in today's trading session? I have a great plan of attack for Wednesday's trading session. We're going to make sure you're ready for up, down, and sideways. Before we get into these charts, though, specifically, let's make sure we take a quick peek here at the calendar for tomorrow because you know who's on the schedule for tomorrow, right? My boy JP tomorrow. Once again, Jerome Powell, with all due respect, he is the head of the Fed here in the U.S. And, of course, he's back on the microphone tomorrow for day number 2 of his 2-day testimony. Now, of course, as we go into Wednesday's trading session, we got some big news tomorrow. Like I mentioned in last night's newsletter, it's quite a busy news week. Tomorrow morning, we get the 8:30 durable goods order, the PMI composite flash. We got Jerome Powell at 10 o'clock. And we got the inventory report if you're trading oil. So we definitely have quite a bit of news on our radar for tomorrow. Now, usually I would say the PMI number is the big news of the day. Purchasing Managers Index, right? It's an inflation report. And as you probably remember from a few weeks ago, inflation, interest rates, bond yields, I don't want to bore you with all the details, but inflation is a big deal right now, right? We've heard a lot about this as we're coming out of the pandemic, a lot of pent-up demand, a lot of low supply, and pretty much everything right now. So PMI composite flash, I would normally say that would be the biggest news of the day tomorrow. Now, of course, we got Jerome Powell right after that PMI composite flash. So hopefully the market doesn't get some cold water poured on it right when Jerome Powell speaks. But I'll tell you right now, if you could only be at your desk tomorrow for an hour, it's definitely going to be that 9:45 to 10:45 block there. Now, as always, right, again, Jerome Powell, the head of the Fed, whenever he speaks, people do listen. So it may get a bit squirrely around that 10 o'clock block, but 10:15 or later, we should start seeing things start to open up on that. So I'm definitely excited for some big news tomorrow. Get the durable goods orders kicking us off, PMI composite, and Jerome Powell at 10 o'clock. If I had to guess tomorrow, I would guess after that 9:45 into that 10 o'clock hour will probably be where all the good pickings are going to be for tomorrow. And of course, don't forget tomorrow morning and every morning, 8 o'clock Eastern time, we'll be right in our trade room getting after it with all of our members in the trade room tomorrow morning. I would love to have you there trading right along with us. So Wednesday, pretty good amount of news there for tomorrow. Don't forget, we get some more big news coming on Thursday and Friday. We'll talk about that in tomorrow night's video newsletter. So again, make sure you subscribe to our YouTube channel, and hopefully by now you've hit that thumbs up button here for us. Back to our charts here. S&P's ready. Nasdaq is ready. Oh, the gold is ready. The gold was born ready, wasn't it? Let's grab the S&P first. Let's jump into the E-mini S&P. The S&P is probably the most challenging of all of the markets here today. Probably the most challenging just because there's a lot of moving pieces on this chart right now. Now, we talked about this in last night's newsletter, right? The market went 1, 2, 3, 4 legs up, and I thought we'd end up back down into that weekend gap. Yeah, we definitely did end up back down into this trading range, retesting that weekend gap like we talked about in last night's newsletter, but it wasn't pretty. It was not pretty, was it? It was a pretty ugly session here. I shouldn't say too ugly, right? There were some pretty good setups in the trading this morning, but the reality is, though, you can see it got all chopped up there, lots of overlapping candlesticks, and anytime you see overlapping candlesticks, you're going to probably have a range in that area. So imagine there's a big magnet up top there, right around that 39.30, 39.35 area, right? That range acting as a magnet. That is a really big part of the plan for tomorrow. You'll notice this range up here is a little bit beefier, right, than the range we talked about in last night's newsletter. We are, of course, though, back down into that range as well. So this range is definitely not something we can ignore either. That range will be a magnet as well. And then, of course, the momentum. Momentum is the big deal here because you'll notice here that strong move down. So right now it's very difficult to justify being a buyer, even if I do have this range up here. I mean, how can you look at that big move down and say, "Oh, give me in, give me long"? It's very difficult to justify buying right now. Now, could we buy a little bit later on in the process? Absolutely, once we see a little bit more information. So we're going to talk about that here in this video. So we're very bearish, right? We are definitely very bearish here. Let me clean up the chart a little bit here so we're not seeing too much stuff on this chart. We'll leave the images, of course, posted on our blog so you guys can see that. So we know we're bearish. There's no doubt about that. Range overhead is a magnet. Range below us is a magnet. I'd like to see if I could get one more leg going lower. Anytime I have this much momentum in one direction, right? Anytime we have this much strength in one direction, usually you're going to see a two-legged pullback and a retest of that high. So I'm trying to find some levels of resistance that I can use. But we also want to be ready for if this market pokes above this area, because if it does, then we start thinking about that range coming back in, all right? So here's kind of how I'm looking to play this thing overnight, pre-market, and of course tomorrow morning in our trade room. Now, I'd like to get, if I had it my way, we go up into some of these prior swing lows. I'm combining the low of that. Look at how well that low lines up, those lows right there, up around that high. So I really like this area here. This is a great shot for what I call a failure into pullback combination. So imagine now we go up into this area of resistance. The moving average now comes up underneath us. The buyers, right, they try to buy that pullback because after all, there's a big range up here. But come on, there's all this bearishness. The odds are not that great that we go right back up without a fight, right? So once those buyers come in and get long on that pullback, we know exactly where their stops are. We know exactly where their pain points are. That's the key, right? Where can I sell where this gives me a huge edge, right? Because if I can place my sell order right below those lows, I can sell right into those stop losses. So again, I'd like to combine the top of this channel along with the kind of the underbelly of that range there, key levels of resistance. I'd like to combine that with what I call a failure pattern. Now, oftentimes these failure patterns will do is they'll crash lower and then they'll pull back, right? Then they'll pull back and make another leg lower. This is why I said earlier, it's a great example here for what I call a failure into a pullback combination. Now, of course, the big target is back to retest the low. If you have an extra contract for a runner, that big low at 38.75. 38.75, it just happens to be a measured move going lower there. It's also a big time bottom, right, as you can see there on the chart. So that would be how I'm looking to sell it as the market pulls back here. But here's some food for thought, right? Here's some food for thought. What if we run up a little bit higher? What if we pull back to the moving average now? And what if those buyers grab hold and make a run like that? That's what? That is called a 1, 2, 3 reversal pattern. Now, at that point now, this range is the magnet, obviously. There becomes a big bullseye right back up to retest those highs now. The buyers now take complete control over the momentum now. And now I know the bulls have control. I want to find a way in. What do? Do I chase it as it goes? No. We don't want to chase it, right? Chasing, that's for rookies. If you're watching this video right now, you have elevated your game away from rookie status. Now you know how the pros think. We're not going to chase it. I'm going to mark up that high. I'm going to mark up that low. And I want to buy that pullback off the low of this channel. Right? So again, I call this a 1, 2, 3 reversal pattern, and then I'm buying that first pullback. Now, as far as that pullback goes, I'm not just blindly buying the low of that channel. I'm going to use really any of my entry setups. My favorites here will be failures, traps, then into pullback combinations, into strength moves as we go higher. Now, I'm not going to go into all the small details of how we actually trigger the entries into these trades. I do cover all of those in the free trading course, which I'll put a little pop-up there for you in the upper right-hand corner. So if you want to get a deeper dive into all the specific entry techniques that we use, again, I'm giving you the basic game plan for tomorrow. But if you want to see how we actually trigger those entries, because we're not just blindly buying or selling, make sure you grab that free trading course in the upper right-hand corner. You'll love the free course. It goes over all the fundamentals of our 3-step strategy, my favorite trade setups, entries, exits. You'll be well ahead of the game after you're done with that free trading course. So grab the pop-up there in the upper right-hand corner, and I look forward to seeing you on the inside on our members section. Now, one more thing to keep in mind would be if the market runs higher. Let's say, for example, right, if it goes 1, 2, 3, we know to find that channel, right? The channel, of course, is the easy one. But what if it just jumps, right? What if the bears just disappear and the market runs back higher again? If it runs higher here and really blows right through this area, now keep your eyes on what I call a 2-try trap. These are great pattern setups when you get a strong run and you don't get that channel. You know what I mean? Again, if it goes 1, 2, 3 and runs, that's easy. I can mark the high, mark the low, and buy that pullback. That's the easy one. If it just simply sprints, right, and runs higher, I don't want to chase after it, right? That's a rookie's game. I'm going to wait for the pullback, wait for a higher high, and then look for a trap. The reason why these traps work so well is because on a strong run higher, it creates this fear of missing out, right? It creates tension in the market. People don't want to miss the next opportunity. But once we get that shallow pullback usually isn't quite deep enough to get the Fibonacci traders in, to get the deep pullback. You know what I mean? The conservative traders are not going to get in on that shallow pullback, especially if we have that trend line coming down. That's why this trap is so effective, right? Want to get that trap on the way back up, right, to retest those highs. Also, too, keep in mind, if we do end up kind of running and we get stuck inside this range again, that becomes a bull market into a range. What do we do with a range-bound market? We buy at support levels with failure patterns below the low of that trading range, right? So keep that in mind for tomorrow as well, right? Failure patterns, again, we talk a lot about those inside of the free trading course. So keep your eyes on the free course there. Again, the link's popped up in the upper right-hand corner. So there are some options for us as the market goes higher. I would love to short the top of this channel, but hey, we'll see what we get as the market pulls back. I don't care what direction I trade in, but right now, the bears have control. Now, what if we end up sinking here and going sideways, right? If the market starts going sideways inside this range, what do we do in those situations? Well, who has control of momentum? The bears have control, right? So we find our levels of resistance and we combine. What I'll do is find triangles and trend lines and find levels of resistance above those highs, and then we'll wait to pop up. We'll wait for those buyers to come in, try to buy that pullback. And again, we'll keep focused on failures. Again, that failure setup, that failure entry trigger, which you can learn more about in that free trading class pinned up in the upper right-hand corner there. That will be my bread and butter. Remember, the one thing though is you want to make sure you sell above the range at a level of resistance, right? Ranges are magnets. Buy low, sell high, but more importantly, it's buy low at support. It's sell high at resistance. So keep that in mind here if we do go sideways. Now, the hard part for tomorrow is if the market rolls lower, right? If the market rolls lower, this is where things are going to get interesting because you remember, there's a big time low down there, right? There's a big low down here at that 38.75. So let's say, for example, the market grinds lower here, right? Grinds lower. This becomes a spike in channel. If it grinds lower into a spike in channel, the plan really doesn't change very much. I'm still going to use these lows to find the highs, and I'm still going to wait for that pop up above those highs. At that point, I'll try to get those buyers to take the bait and get long on the pullback. Very similar we talked about before. And we'll look for that failure into pullback combination pattern, just like we mentioned right at the beginning of this chart analysis. So if it keeps grinding lower, not a lot changes, right? Not a lot changes there, especially if this market was to really punch lower, right? If it punches lower, now what I'll do is adjust my channel down. And again, a lot of this is very similar, right? We'll mark up a prior swing, wait to get up around a level of resistance, use those failure into pullback combinations to short off of those highs. Now, here's the big question though. If we get down into this area, can I buy down here, right? If we take out these lows, can I get long off those lows? Because, I mean, after all, Joe, didn't you say ranges are magnets? Isn't that weekend gap a magnet? It certainly is. But what's the problem, though? If we run down to that 38.75, and even if we break below it for a little bit, right? Not that big of a deal. But if we do end up back at that 38.75 area, can I buy this thing? I can, but I have to be very patient to give the bears the benefit of the doubt. And what you want to do in that situation is let the bears try once, let them try twice, and then there's a couple options here. I can buy off a trend line, always my favorite, or I can buy into stops. As long as that second option, you get option number one, option number two, as long as that second option is not inside of that trading range. Now, these are basically failure patterns down here. They're just a little more patient because all of the market is bearish at that point, right? So I definitely can buy off of this low, but I don't want to just blindly buy it, right? I want to give those bears the benefit of the doubt, let them try a couple times. And again, if we get lucky, we'll draw a trend line off that low. Sometimes we don't, and we'll just use the stop losses. Remember, if you're a seller here, right? If you're a seller down here and you're getting short on these pullbacks, where's your stop? Your stop is right above these highs. So that range overhead acts as a magnet, easily drags this thing back up into that trading range. So that's the game plan here for tomorrow. The price goes up, the price goes sideways, and the price goes down here. Be very careful trading short though as we get down into these lows. If we do run lower, wait for that pop, wait for those failures, and back down to retest those lows. Pretty good game plan for tomorrow. And again, we get a bunch of big news tomorrow morning too. So that'll be an exciting time to be trading with us tomorrow morning in our trade room. All right, how about some Nasdaq here now? Nasdaq has kind of broken away from its correlation with the S&P. A couple folks last night were saying the Nasdaq is always similar to the S&P. It is definitely not. The Nasdaq has a very different personality. The S&P, of course, is made up of the largest companies in the U.S. The Nasdaq is made up, a lot of them are the largest companies, but they're tech stocks, right? So very different personalities between Nasdaq and the S&P. What do you think the big deal right now in the Nasdaq is? Look at the chart right now. What do you think? That range, right? That range is huge. Now, it's not a surprise, right? It's not a surprise. We talked about this last night on the newsletter. We had all that strength going up yesterday. And if the bears couldn't take it lower, then we anticipated we might go sideways here, right up around these highs. A beautiful example, though, we talked about this last night on the newsletter, right? We mentioned if the market goes up and retests those highs, what do? Crown reversal. Do you see it? See the reversal right there? What a beautiful example that was today. 1 try for the buyers, 2 try for the buyers. Guys, it doesn't get much better than that. So if you watched last night's newsletter and you were taking notes and ready for today, beautiful example there of a crown reversal pattern, just verbatim out of last night's newsletter. Well, now you'll notice what happened, right? So the bears, of course, they get their reversal off the high, and they tumble now running lower. Now, this is a really important clue because anytime, remember, ranges are magnets. I want to buy at support levels below the range. I want to sell at resistance levels above the range, right? Remember, buy low, sell high. But here's an example where we're coming off the high of the range and we're rotating back down again. Okay, I call this rotation off the high. And really all it means is there's a hell of a lot of bear momentum in this market right now. So even though I want to be a buyer off of this low, right? Even though I want to be a buyer off of this low, I still can't deny the fact there is a big, strong bear move down. And for the most part, most people are probably going to be looking at that trend line and saying, I want to short that trend line, right? I want to take this thing back down where the S&P went, right? The S&P went all the way back down to that range, right? Down at that, 12,825 half, 12,820 area. So that's where the bears want to go here. Lot of momentum for the bears right now. But ranges are excellent magnets. And overall, right, there really is a lot more bullishness in this market than there is bearish, even though the short-term move is quite bearish. So what's the best way for me? Here's a really valuable lesson here. These are one of the trickier types of scenarios because I do want to be a buyer back in, but come on, look at all that bearishness, and look at that trend line, right? I mean, come on, even a novice trader can see that darn trend line coming in. You put a little trap high up there. That's a great spot to get short if you didn't know it was a range. So we got to be careful on this. So there's a couple things I'm looking for right now. Anytime I have a lot of momentum, I know I've got to respect the bears and let them try once, try twice, and then back up. Kind of like what happened back here, right? We get that strong move down, and if you look closely, right, the bears try once, the bears try twice, and then whoop, right? That's a classic failure into pullback combination, right? We talked about that earlier on the S&P chart. So, bottom line is I really have no choice here. I have to wait for those bears to try a couple times before I can really get my hooks in this thing and go back up right into that trading range. At the same time, though, we have that trend line coming down. What is that trend line? It's a big, fat, juicy level of resistance, right? And I don't want to buy into that resistance. I don't want to buy into resistance. So what do we do in this situation? We've got to use a trap. Traps are always my go-to setup whenever I don't want to buy high or buy into resistance, or the opposite, right? Sell low or sell into support. So now put those two together, right? I want to see the bears try twice, and I want to trap, right? So 1 and 2 and a trap off the low. That is really the ideal way to buy this thing right now as it's going higher. Now, remember, there's a lot of variations of this setup. These setups do take on, right, quite a different personality sometimes, right? Sometimes they'll go up, they'll go 1, they'll go 2, and you won't have, you know what I mean? There won't be a lot of space right there. So you just gotta be aware of kind of how this thing sets up here. Ideally, though, I want it 1, I want it 2, and I want that trap. Again, this is nothing more than a failure pattern, right? I'm letting the bears literally dig their own grave, right? 1 try for the bears, 2 try for the bears, and with that trap coming down, I want with that trend line coming down, I want that trap low to rope in the bears and avoid buying, right, too high into that area of resistance. Now, this may get a lot easier for us. We could easily now just run right back up into that range and go sideways. Now, if we get that going on, now that trend line becomes our best friend, because now that's no longer a resistance trend line, it's now a support trend line. So guys, what do we do in a bull market? Into a trading range, we find levels of support, right there, and we of course use, right, our failure patterns. So that really becomes very easy tomorrow if we get the market running back up into that trading range. Another thing to keep in mind would be if we make that run up, that pull back, and that go. Now, this is a very good example of where you always want to know where the market's trying to go, right? So we have a good idea here where the market wants to go. The market wants to go back up and retest those highs. So if I get a 1, 2, 3 reversal, okay, what's my problem? Remember, there's every trade usually boils down to one of 2 things, either location or momentum. Right? That's usually, I always tell my clients before we trade together in the trade room is, okay, what is my location? Like, for example, right now, right? Location is, if we make a run going higher, location is not good. But how is momentum? Momentum's great, right? It's great, strong momentum move there. So momentum is solid, but location is not, right? So if I get that 1, 2 go, I like the fact that now we have a lot of momentum, but again, as you can see here, we don't have a lot of space overhead. So what do you do in a situation like that? What you do is you look for a trap, right? You look for traps. You find the top of that channel, you mark the low of that channel, you find a prior swing, and you make sure you get underneath that prior swing. Now, of course, there are likely going to be a lot of different swings to choose from. Okay, so we'll talk more detail as far as how to choose the right swings. I do have a technique where I use that 1, 2, 3 move in our trade room. So if you're a client of mine, we'll make sure we pinpoint the right swings. If you're not with me tomorrow morning in the trade room as a member, though, just be aware as we go higher here, you get a lot of concern about location, right? Momentum is great, so keep your eyes on those traps. And again, as I mentioned before, we're not just simply buying the low of that channel, right? Using failure patterns, trap patterns, strength moves as we go to the highs, and of course pullbacks as the moving average, right? As we go failure into pullback, right? Combination. Again, I cover all those smaller details, all the entry triggers in that free trading course linked up in the upper right hand corner. So make sure you grab that as well. Also too, if we were to get this market, say, go into the range, go up and take out those highs now, could I sell this thing back down again? I definitely can. Remember this pattern back here? Absolutely. That pattern still works, right? I can go 1 try for the buyers. I can go 2 try for the buyers. And I can hit them right where it hurts using that range as a magnet, right? So we go up, buyers try once, buyers try twice, right? See it right there? That's the same idea. Now remember, you're going to want to make sure we take out these highs though, right? We're not going to want to do it right here, right? I'm not looking for it right there. I want to actually see them take those highs out, right? Kind of complete their mission, if you will, because that's where they want to go, right? They want to rotate back up to retest the high. Once they complete their mission, now buyers try once, buyers try twice, right? It's that trap high, it's that hidden channel high. Those are fantastic shots there. Again, because remember, at that point, we're very bullish. The range below us still acts like a magnet, but still, we're very bullish at that point now. And we'll look for that run back down after those buyers have tried a few times. Now, of course, if we go up, right, strong move up, we hold that pullback and we blast, right, through that high. What is that called? A 1, 2, 3 breakout. Yeah, didn't do it there. They didn't do it there. So we'll have to wait and see if they can actually get that breakout, right? And keep in mind, too, it may look something like this where it goes 1, 2, 3 up. And then we actually have to get that breakout and hold, right? So if we get a 1, 2, 3 move going higher here, that will not be enough for a breakout. But if those buyers, if they can hold that pullback and they can get that 1, 2 go, right? That strong pop off the moving average, again, couldn't get it there, right? So don't assume a strong move higher just guarantees a breakout. They're going to hold that pullback, and then we can go from there. At that point now, it's easy. I can mark up that high. I can mark up that low. And again, I'm looking for seller failures. I'm looking for bullish pullbacks, looking for traps, strength moves as we come off the low of that channel. Now, where do you think the market wants to go up there? Where's the next low? Oh, that's right. We've got that brick wall of resistance up there, right? Remember, lots of tops, bunch of different highs up here, right? Some were lower, some were higher, a bunch of tops up there. So be very aware of that 13,300 area as we go lower. And then, of course, I'm sure you're dying to find out, how do we sell this thing as we go lower? Well, again, I can't get short until I break free of this range. So it's going to have to be a 1, 2, 3 breakdown. And, keep in mind, too, this may go all the way back to that trend line and break down. It probably will at least pull back to this trap area, I would imagine, right? Get back around that trap area, that strong move down there. If I can get that 1, 2, 3, right, that will give me now that breakout. If I can get that breakout, I can mark that low, mark that high, right, and find that short off the high of that channel. Don't forget, first test is always the best test. And again, if you want to see these specific entry techniques we use to get short off the highs of those big wide channels, definitely check out that free trading course that I mentioned before. Now, we may also see this market go 1, 2, 3, right? So it may end up going 1, 2, 3 down. That works as well. Mark that low, mark that high. And again, we're looking for failures, pullbacks, strength, right? Bull traps off the high of that hidden channel. So a relatively easy idea there. And again, the bears, they want to run back to the weekend gap there, 12,825. So who wins this battle for tomorrow, right? Will the range hold control here, or will these bears, will they hold this pullback, get that run, and we're off the races here, going back down to that weekend gap and the range from last week. Nasdaq's ready to go here. Let's grab some gold here now. Gold is relatively easy. It's not the prettiest of markets right now. You can definitely tell there is, again, another range on this chart right now. So what do we have going on right now? Well, we basically, if I clean this stuff, there's a lot in this chart you can see here right now. Let me try to clean a little bit of this up here. Battle zone's off, range is off there. That looks good. The amount of the move above the range is the amount of the move below the range, right? We call that the pendulum swing. That, of course, I can get off of there. That weekend gap, right? By the way, what is the weekend gap? The weekend gap is the closing price from Friday. And it's whenever there's a gap between the closing price on Friday, the last candlestick on Friday, and of course the opening price on Sunday. That weekend gap, right, is a magnet, and usually by the end of the day tomorrow, Wednesday is tomorrow, right? End of the day on Wednesday, usually it's when we end up back to those levels. The S&P's already done it. The Nasdaq, maybe tomorrow, right? And we'll see if the gold does it as well. Most important thing right now is the gold is kind of one big range, right? I'm keeping it relatively simple by using the last 2 days here, but I mean, you could really extend this thing out and say that's one big range right there. And we've talked about how difficult it is when a market rotates off the high, right? Because yes, that range is a magnet, but there's a lot of bearishness, right, in this market right now. In fact, if you were to look at this on like a 4-hour chart, right, if you're a buyer right now, do not look at the 4-hour chart because it's just straight down, right, into a range down here. So it's overall a very bear market here on this gold. Now, that does not mean that with the right entry setup, we can't trade this sucker, right? Does not mean we can't buy this thing because that range is just begging to get used as a magnet right now. So it's very simple. We've got a bear market or a range-bound market with a very significant bearish move lower. I've got my areas of support. We're marking up underneath my areas of resistance. Again, I really like the fact that we've got this pendulum swing right underneath those lows. I'm also marking up those highs and bringing it down to those lows there. You can see it's a little bit further to go, right? So we got the pendulum swing at 1721. I've got the low of this channel a little bit lower than that. So don't be surprised if we do go a little bit lower here, right? Take out that pendulum swing at 21.6, take out that channel low as well, and then make that run back higher. I've also got a big bottom there at 16.6 before we go down to that 1700, that big round number. So a pretty big deal as we go lower. That, and in all reality, that could be even a little bit higher, right? Kind of mark it up like that. That could easily be kind of a range of support down here, right? That we have to be very careful with that move going lower. So I want to be a buyer on this, right? There's not a lot of options right now to be a seller, right? I'm not going to sell this pullback, that's for sure, because again, that range overhead is a magnet. And if the market goes lower, are you crazy, right? I'm not going to sell in this low here. I realize we're very, very bearish, but I'm a day trader, right? I'm using small stops. If you're trying to use a small stop loss, you've got to really pay attention to timing your entries properly because, you know, if you're a day trader using a 4-hour chart, you're probably getting chopped up a lot and trading against the momentum or trading into pretty obvious support levels. So I don't want to just sell short here because that range is a magnet. So the most important thing right now is there's no overhead resistance that I have to worry about, right? On the Nasdaq, we had that trend line coming down, right? That was a big challenge on the Nasdaq. The Nasdaq has this trend line coming down here. We don't have that problem, you'll notice here, on the gold. So we've got momentum, which means I want to wait for the bears to try once, try twice. Once those bears try a couple times, right, on this pullback, and I've got them right where I want them, now I've got those stops hanging out right above that high, right? Once you get these bears trying once, trying twice, again, find the trend line coming up or buy into stop losses, we can get the trend line, we can get those stops getting run, and we can use that range overhead as a magnet. Again, this is nothing more than a failure pattern. It's called a nested failure because it's a failure inside, right, of the pullback. So that's why I call it a nested failure. I don't have to worry about a trap low, but I'll tell you a trap would not be bad at all, right? Getting a trap low on that nested, right, would not be a bad thing whatsoever. So traps are not required, but they sure as heck won't hurt, right? Definitely added bonus points if you can get that trap off the low. And again, number two, we may go a little bit lower here, take out this pendulum swing, moving average comes over, bears try once, they try twice, right? I'm marking up that trend line. I'm running those stops, right? There's two ways to enter off this. We'll have to wait and see what kind of variation of this particular trigger we get tomorrow morning in the trade room, but that's the idea, right? Give the bears the benefit of the doubt and then hit them right where it hurts. If you can get in off the trend line, great. You're buying nice and low at support. If not, right, hit them into those stop losses. And also, too, keep in mind, these will oftentimes snap up. You can go out and draw a new channel coming off that high, and you can buy that pullback off that new channel, right? So failure off that low into pullback combination. These happen a lot, these failure into pullback combinations as we go higher here. Now, or as we go lower. Now again, try to sell down here, crazy. I can't be a bear in this area down here. I'm gonna have to wait for, if I want to be a seller as we go lower, I'm gonna have to wait for that move into those lows. They're gonna have to hold this pullback and jump, right? You've really got to see a lot of strength on that 1, 2, 3, in this case, 1, 2, 3 breakout, right? I know it's a little bit late for the range. We get that big low there at 17, 16.6. So I'm definitely not going to sell if we see a breakdown like this. This is a problem waiting to happen, right? It's a loss waiting to happen. If we end up taking out those lows here, I'm going to keep looking for that 1, 2, and then back up into that trading range, right? So not a lot will change here on the plan as the market goes lower, right? To try for the bears, buying into stop losses, buying that pullback, same thing as we mentioned before. However, if they can go strong move down, hold that pullback, and jump off that low and run through that low, now we're on, baby. Now we can mark that low, mark that high. And again, first test is always the best test. I'm looking for buyer failures, bull traps, bear pullbacks, bear strength moves. And again, we cover all those small details right in that free trading course linked up in the upper right hand corner. So if you want to get all the details on the entry triggers we're using, because again, we're not just blindly selling the top of that channel. And then of course, right, that 1700 is pretty much the only big target down there. So the bears have a nice big incentive to push this thing going lower. Now, of course, as we mentioned earlier, if the market does simply run up right into that trading range, that creates a range with a bullish bias to it. We'll find our levels of support below, combine those failure patterns off support levels below. One of my favorite ways to trade a range-bound market, right? Get underneath that trading range, wait for bears to come in and sell short, and literally pick their pocket, buying right into those stop losses, right? Now, if the market rolls, right, and runs higher, let's say we jump higher here, we push off the moving average and we run. Where's the market trying to go? It's probably trying to get up, fill that weekend gap, and take out those big highs up there at 1747. There should be enough room. If I can get a 1, 2, 3 reversal like this, 1, 2, 3 breakout. Again, didn't happen here, but if we do get that 1, 2 go, and I have enough space, I can absolutely mark that high, mark that low, and I can definitely trust that first pullback off the low of that channel. Now, obviously, if the market takes off, right, if it goes 1, 2 all the way up like that, then as we go higher, what's the plan? Traps, right? Traps. Try to find that trap off that low, right? So if we really start to cook higher here, just again, we'll talk more details about this tomorrow once we actually get our hands on that. We'll find those traps because that's the key to avoiding buying too high. And we'll talk about the specific swings we'll use and the techniques of that 1, 2, 3 move tomorrow morning in our trade room. All right, guys? So now we get a pretty good plan there as the market goes up, right, as it goes down. And, of course, if it gets stuck sideways here, remember, trade it like a range, right? Buy low, sell high, focus on failures at those turning points just outside the range. Now, tomorrow morning is right around the corner, right? 8 o'clock Eastern time. We'll be here before you know it. I would love to have you there right there with me tomorrow morning, trading along with us in the trade room. Getting registered for tomorrow's trading session is really easy. If you're on the blog right now at Sideways Markets, I'll put a button for you to click below this video tonight on the trading blog at sidewaysmarkets.com. If you're on the YouTube channel right now, there's a link to join tomorrow's trade room and every morning's trade room as a member in the description of this YouTube video. So grab that link, get registered, and if you have any questions, don't be afraid to call the office. I'm always here. I promise I won't bite. Don't be afraid to call me in the office. I'd be happy to answer all your questions. We got a bunch of different payment plan options right now, so I'm more than willing to help walk through the whole entire process and get you started tomorrow morning at the opening bell. Don't forget we got live chat on the left, live chat on the right, and I hope by now if you have any questions, you can drop those questions for me in the comment section below, and don't forget to subscribe. And as always, if I don't see you guys tomorrow morning at the opening bell, I hope I'll see you tomorrow evening because we're going to do this all again tomorrow night. Same time, same channel. Hope I'll see you there right there with me. And don't be afraid to share this link with a friend tomorrow as well, right? More the merrier in our trade room. But that's it for me, guys. As always, hope you guys learned something. Hope you earned something with it tomorrow. Hope to see you guys tomorrow morning at the opening bell. If not, we'll see you guys tomorrow night on the next edition of our nightly newsletter. My name is Joseph. As always, be well out there. Be nice to each other, will you? And be here next time, all right? Adios, amigos. Bye-bye for now.